Life is a journey, and each day presents itself with new challenges and opportunities. That is why, at the Malawi Stock Exchange, we'd want to walk beside you as you pursue your goals and chart your own path. Investing on the Malawi Stock Exchange is an opportunity that is available to each and every Malawian. By buying shares and bonds, you embark on a journey of building your own worth and that of your loved ones. The process of investing on the Malawi Stock Exchange is easy. You simply need to select a broker, open a brokerage account with your broker for free, and start investing. The broker will also guide you on how you can open a central securities depository account with the Reserve Bank of Malawi, where your record of ownership for shares and bonds will be securely kept. Start investing today.
Thank you, our esteemed investors. I would like to welcome you to this second investor awareness function. This is the function whereby the Malawi Stock Exchange would like actually to avail itself to you, our esteemed investors, actually trying to bring to you, it's more like actually bringing the stock market to you, the esteemed investors, and knowing, for example, in terms of our operations, also in terms of the products. But this function, the investor function, we are going to earmark specifically trying to highlight issues on factors to consider when you're trying to invest in the stock market, especially when you're trying to invest in shares. What factors are you going to look in? And then when you're investing, you know that at least there are always risks associated to it. And therefore, there's going to be a topic which is going to look at the risks that are associated in actually investing in shares. This could also be bonds, actually trying to find out what risk can you actually encounter and what mitigating factors can you put in place so that at least as you meet those risks, you are able to mitigate them. Then going further than that, actually during this investor awareness function, you find that at least the experts within the capital market, within our membership, they're going to give you tips in investing in the current macroeconomic environment. You know, we're moving actually in the current macroeconomic environment whereby there are lots of variables which we are going to look at. For example, the inflation, the interest rates, and then the exchange rate. And then what tips can you actually have in terms of investing in the current macroeconomic environment whereby you are going to look at all these macroeconomic variables which I've mentioned, i.e. in terms of inflation, in terms of the exchange rate, in terms of interest rates, as well as the GDP growth rate. On top of that, also in terms of actual unemployment rate which we have. And then as an investing public, you know that at least you have invested in shares which are public listed companies. You need actually to look at in terms of what relevant information are you going to look at, especially after investing actually in shares, especially during the time of AGMs, in terms of what information are you going to look at, and then what type of questions are you going to ask, such that at least when you attend these AGMs, there's lots of information which you look at in terms of the notices of AGM. There could be corporate actions in terms of the dividend announcements, and also in terms of maybe change of management, and all these actually come within the corporate announcements which the Malawi Stock Exchange releases. And therefore, it is paramount and important to you, the investing public, to know this information so that at least you can make an informed investment decision. So basically, our aim of actually having this investor awareness function, though it is through a webinar which is a virtual, we need also to be quite grateful that at least it's going to reach as many investors as we can, because it will be just at your own time, especially when you are behind your desk doing something else. You would be able to follow the messages from this our resource person. I therefore urge each and every investor who would like actually to invest in the stock market to follow this awareness function for the benefit of you, so that at least whenever you want to invest in the stock market, you need to make an informed investment decision which would be in a position for you to actually to realize in terms of the benefits, i.e. in terms of your wealth creation and then the returns you can get on the stock market. I therefore urge you to participate, and I wish my colleagues fruitful deliberations as they relay the message to you, the investing public, so that you make your informed investment decision.
at Continental Capital. Okay, investing is making your money grow, hence building your wealth. Most of the people, they tend to interchange between investing and savings. There is a difference there. Saving is just keeping your money. Some, they actually use piggy banks as savings. But now what happens is, when you are saving, you don't get income from those savings. For example, if somebody puts 100,000 in a piggy bank, at the end of the year, they will still receive 100,000 in that piggy bank. But now, if you're investing, you're making your money grow. Hence, that money gets to work for you. There are different assets that somebody can invest in. People can invest in shares, people can invest in bonds, people can invest in property, and even starting a business, that's a form of an investment. We have 16 companies that are listed on the Malawi Stock Exchange. They are in different sectors. We have got some companies that are in the banking sector, some in the telecommunications, some in the hospitality, some in agriculture, and we even have some that are in property, just to mention a few. So just to mention a few companies in the banking, we've got National Bank, we've got Standard Bank, we've got NBS, we've got FGH. In telecommunications, we've got TNM, we've got Airtel. In agriculture, we've got Ilovo. And then in property, we have Biko, we have got Icon. In hospitality, we have DHL, we have got Sunbet. And then we have got a conglomerate company, which is PCL. These are some of the companies that one can invest in. One has to have a clear objective on investing. Okay, I'll talk about the 3 W's that one has to ask themselves to have a clear objective. Who can invest? Why are you investing? And what can you invest in? Alright, talking about who can invest, anyone can invest on the Malawi Stock Exchange. You can start with any amount to invest on the Malawi Stock Exchange. Talking of anyone, it can be minors through parents, it can be youths, maybe they are in school, or maybe young professionals. It can be parents, they can invest on the Malawi Stock Exchange. And then why are you investing? You have to answer that question. You know, it's okay to have a lot of answers to that question on why you are investing. But there's a problem if you don't have an answer at all. It's very dangerous if you don't have any answer at all on why you're investing. You know what? Because whenever you put aside those funds, and if anything happens, you tend to go back to that fund to tap in on that fund because you don't have a reason why you invested those funds. But if you have got a clear objective on why you are investing those funds, you'll be able to keep those funds. People invest for different reasons. It can be buying a car, that is a short-term goal. It can be a long-term goal, like retirement. That's why people might choose to invest. So you have to identify your goal first to say why you're investing. If it's buying a car, that's a short-term goal. So once we know your goals, as the stockbrokers, we also have asset managers. We are there now to help you to link on what now you can invest in. So talking about what you invest in based on your goals. If you've got a short-term goal, you can consider companies that have got stable growth and also consistency in terms of their returns. For example, dividends. if you invest in a company that has consistency in dividends, you get to get some returns. If it's a long-term goal, you have to invest in companies that have potential in growth. To say in 10 years' time, that company would have reached a certain level. So you have to know your goal, and then we can link that goal to the companies that you can invest in. You have to understand the sector that the company is operating in. Understand how the company is performing in that sector in relative to its peer companies. You also have to understand the environment that the company is operating in. And then we look at the strategy. You need to understand the strategy of the company. If that company is making money, you tend to also make money. So you need to understand the strategy of the company. Each and every company has a strategy. Some companies, they can say our strategy is revenue growth. If the strategy is to have revenue growth, in turn, they'll have an increase in profits or an increase in their earnings. And that will have a positive impact in terms of the dividends. You also get an increase in the dividends. Also check in investing in understanding the company strategy. Also check if your investment strategy is in line with the company strategy. If the company has a long-term strategy, you have to invest in that company. We have to look at the financial performance as well. Track the financial performance over a period of time. For example, you can track the earnings of the company over a period of time to check if the earnings have had a stable growth or the earnings have been volatile over a period of time. So if the earnings have been volatile in a period of time, you tend to know now when to buy the stocks, because when the share price has gone down, you tend to know when to buy, and when the share price has gone up, maybe you can decide of selling. And also you have to understand basic ratios that will help you to identify cheaper stocks. And also that will help you to check if the company is undervalued or if it's overvalued. You can look at ratios like price to earnings ratio. You can look at price to book value. You can even look at earnings per share to be able to understand if this company is fairly priced. And these ratios, they don't work in isolation. You have to make sure that you compare the companies in the same sector to be able to identify if this company is cheaper or if this company is expensive. You also have to check the company's consistency in paying dividends, because dividends is income to an investor. So if the company is paying dividends, you also get to benefit in terms of income. Okay, somebody can be asking themselves, but where do we get all this information? So one good thing about the listed companies, they are obliged to transparency. Okay, they have to publish their financial statements. And if you're to look at those financial statements, like they have what we call the full page, the detailed financial statements. If you're to read on the chairman's report or the CEO's report, they always detail about the strategy of the company, where the company is heading to. So you can get that information in the financial pack. And you can also get the information on the Malawi Stock Exchange on their website. They always update the public on what is happening. Be it the company has issued a trading statement, a cautionary statement, or the financials, or if the company is paying out a dividend, they always publish these on the website. Most companies, they do arrange what we call investor forums, whereby investors, they get to ask questions on the company. So you can ask questions about the strategy, they will highlight everything. And the company could tend to communicate to the investors on their intentions, on the performance. So you get to get more information about the company. So it's always important to attend those investor forums. Okay, what I can say is have interest in what you've invested in. Know what you've invested in and why you've invested in that. Some people can say this is a cumbersome process. Don't hesitate to consult professionals for advice. They'll impact the knowledge on how best you can choose the companies you can invest in. But for more information about investing on the stock market, don't hesitate to contact us at Continental Capital. Our office is at Mulimi House on your way to Namiwawa, that is in Blantyre.
My name is Regina Kachingwe, equity dealer for Cedar Capital Limited. We are situated in Livingstone Towers, 4th floor in Blantyre. There are a number of risk factors one needs to consider when buying shares. I'll begin with share price volatility. The past performance of a company does not indicate the future performance of the shares. I'll give an example. When one invests 1 million in money market at an agreed rate, be it a higher rate or a lower rate, you are guaranteed of $1 million plus at the end of the investment. But in shares, it's a two-way thing. You come out with more than 1 million or less, whereby when you want to sell, let's say you're selling when the price has gone down from the price that you purchased your shares at, you're automatically making a loss. So in this scenario, we ask the investors to always consult professionals. For example, ourselves as stockbrokers here at Cedar Capital, before investing for someone, we give them advices. Here at Cedar Capital, we do company research, whereby we indicate whether this is a buy or a sell. So whenever one has ventured into the share market, we always ask them to say whenever they want to make a decision, they need to consult. So when they consult us, we are able to advise them to say, no, this is not the right time to exit. Yes, now you can exit. So at the end of it all, we advise the investors to always go for medium or long-term investments. We discourage short-term investment. So whenever you want to venture into share market, always put in money that you can hold for long. For example, there is a government policy that says the government only charges capital gains tax on shares that are sold within a period of 12 months. But any shares sold after 12 months, there is no charge. So as you can see, that is just another way of encouraging people to say whenever you want to invest in shares, always go for medium or long-term investment. Another risk one needs to consider is the liquidity risk. This is a risk whereby one is unable to sell at the time that they want to sell, or at the price that they are willing to sell for. So one needs to accept the fact that whenever they want to exit, they will have to go for the prevailing price at that particular time. So if you're not careful, if you're exiting the market at a wrong time, you end up selling way below the price that you purchased your shares at. That is automatically making a loss. So I'll go back to the same point where I'm saying every time you want to make an investment decision, always consult your professionals. So when you want to exit, always consult your professionals, whereby they will advise to say, yes, this is the right time to exit, this is not the right time to exit. Sometimes it happens that the time that you want to exit, there is no demand in the market. So you are forced to wait up until when there is going to be demand and you'll be able to sell at that particular time. So shares are different from keeping money at the bank. When you put money at the bank, you are guaranteed that at whatever time you want, you'll be able to go and cash out your money. But that is different with shares. You need to go with the market demands and also check at the price prevailing at that particular time. Another risk one has to consider when buying shares is the concentration risk. Diversification, this is where you have to buy a couple of counters, not just place all the money in one counter. This helps in a scenario that when you spread the money in different counters, you are spreading the risk, whereby when one counter that you purchased is not doing well, or maybe the price is dropping, you are able to recover the loss from that particular counter from the other counters that you purchased. And I'll talk about another risk, which is the residual risk. This is whereby the company that one has invested in is at closure. When the company is closing, it has to take care of all the available bills at that particular time, creditors and everyone else. So when the company has paid out everyone, and at the end of everything, there is no money left, it means all the shareholders in that particular company have lost out money they invested in. Because immediately you buy shares in a certain company, you become an owner of that particular company. So you are paid last. That is if at all there is going to be money left. But in a case that there is no money, that's how people lose money. So this is the reason why we at CEDA, we always advise our investors to always seek professional advice from us before making any investment decision. Because we watch the listed companies closely, whereby whenever we see a red flag, we are able to advise all our clients to say, this is what is happening in this particular company. I think this is the best time we exit before things get out of hand. So always seek professional advices. In our environment now, there are microeconomic challenges that are happening. The devaluation, inflation rate, which is now 23% from a single-digit number. There is the fuel inflation, interest rates rising. One would think this is a time to exit the stock market and go into the money market or treasury bills. But I'll advise the investors to say this is the best time to enter the market. There are two things that happen. With the macroeconomic challenges we are having currently, some companies, on the listed companies, are struggling. They are struggling whereby prices are dropping and people think this is the best time to exit. We encourage our investors to take advantage of such situations because we do company research. So we see the capacity the company has to bounce back in a year or two, or maybe in 5 years' time. We encourage our investors to say this is the time to buy cheap. So you can invest in those companies that are struggling now because we know in the long run they will do better. The other point one has to look at is there are other companies that benefit because of the microeconomic challenges that are happening. For example, some companies within the financial services sector. So in those, for example, for those companies, you find them that they are scarce on the market. Everyone wants to hold on to them because they are doing more. That's the time now one has to buy those particular companies, because automatically there is no supply in the market. The price already goes up because of less supply in the market. So that's the best time to buy those particular companies for one to benefit in the capital gains. My advice to my potential investors out there is a KISS rule that teaches us to keep it simple and always invest in something that you understand. So us as Cedar Capital, we believe in company research, whereby we do research for all the listed companies on the Malawi Stock Exchange, and then we advise our clients to say this is a buy, this is a hold, this is a sell. So for all investors out there, always seek professional guidance. We at Cedar, we are ready and always available to assist our existing clients as well as potential clients to come.
Kondwani Magwagwa. I work for Stockbrokers Malawi as equity and money market dealer. Thanks. After the purchase, or I should start that the first is to get a confirmation that indeed you have bought the shares, and this is through the broker DUNOS and the CST statement. Now, after that, yes, you should not just stay idle, and you need to monitor your investment. So there are things that as an investor you really need to look at. So we'll talk about things like dividend, company meetings, stock news, financial statements, research papers, and other information. So to start with, the dividend. So when we talk about dividend, we are talking about a share of company profit that is distributed to shareholders. So the name used is dividend. Normally, dividend are paid twice a year, though there are some companies that pays 3 times. So as a shareholder, you need to look for this information for the dividend announcement. Dividend is a return, it's one of shareholder return. So where can someone know that the company has issued a dividend? You need to look for this information in the press, in the newspaper, but you can also look at from the Malawi Stock Exchange website. You will find this information about the dividends payment, and you need to follow the dates. Normally they will indicate when the dividend is going to be paid, when the register will close. So you need to follow up and make sure that indeed the dividend has gone into your account. So if you're not sure, suppose you're not sure that you have received a dividend or not, you need to contact a broker to ask if any dividend was paid. And apart from a broker, you can also contact a transfer secretary who will check in their register and verify that indeed you received a dividend of so much. So that is very important as well. And then you also have to look for announcements of company meetings. So when you're talking about company meetings, this can be annual, general meeting, extraordinary meeting, or any other meeting. So these meetings are very important because shareholders are presented with important information about the company. So you know how the company is performing, and you get to know very important information about the company. Through these meetings, it's also an opportunity for a shareholder to interact with other shareholders and get their views about that particular company. So you can get this information from the press or from the Malawi Stock Exchange website. But apart from that, that information is also sent to the shareholder through the postal address which you gave when you are buying the shares. So you get that information through that. Alright, so apart from receiving through postal address, so things nowadays they are changing. We are moving to electronic. So you can also give email address, the transfer secretary, and you'll be able to receive this information electronically, which is also an efficient way of getting the information. Another information that is also important is the stock news. So these stock news, they are sent by the Malawi Stock Exchange, and they are in many forms. We have daily stock news, we have the weekly stock news, we have the monthly reports, the quarterly reports, and some reports are sent on annual basis. So with these reports, an investor is able to know and analyze the pricing and the trend data, which is also essential in making investment decisions. So you are able to know how the share price has been moving, the activity for the month, for the week. So this information is also important in making a investment decision. So you can get this information, the stock news, via the Malawi Stock Exchange website. So another information to look for is the financial statements of the company. So what are financial statements? So what is the purpose of financial statements? So this one, they provide a snapshot of a company financial health, giving insight into its performance, operation, and cash flow. So through the financial statements, you are able to know more about the company. And this is also important as it will assist you as an investor to know whether to buy more shares in that particular company or even sell you are holding in that company. So through financial statements, you are also able to make an informed decision about the company. The financial statements, you can also get them through the press, daily papers, and also the website, the Malawi Stock Exchange website. But they are also, if it is the year-end financial statements, they will also be sent to an investor through the given address. And then another thing to look for is research papers. So research papers help in analyzing the performance of the company and assess whether the market price, the share price of the company is over or underpriced. So this decision is also important as it will make an investor to know whether to sell or buy or even hold to his stock. So the research papers, they are normally done by a broker, so you can get this information directly from your broker. And then there are other things to look for example, the trading statements, the rights issue, or if there is any bonus issue. So the trading statement is a statement that is released by the company indicating whether their financial statements would differ by 20% either upwards or downwards. So through this trading statement, an investor, you also know the forecast, the financial forecast for the company, and it can also help you to make a decision whether to buy more or to sell. And if there is any rights issue or bonus issue, this information will also be published in the papers. So it's an opportunity for a shareholder to add more shares to our existing shareholding. So through this, you are also able to participate. So that is that. On other things to look for. So in summary, what we are saying is, after buying shares, you should not just stay and say, yes, I've done it, I've made a purchase, I'm an investor in this particular company. We are saying no, you should look for more information, so that you need to make your investment to grow. You need to make it as a habit of buying stocks. So what we are saying is, you need to look for information such as dividend announcements, company meetings, the stock news, financial statements, and also research papers. As I said, my name is Kondwani Magwagwa and I work for Stockbrokers Malawi. Our offices are in the head office of National Bank of Malawi, ground floor. And you can reach us using this email address, kondwani@smlmw.com. Thank you.
I hope you have taken into account the tips which have been relayed to you. I therefore wish you all the best, and you make use of the information which has been given unto you for the betterment of your life, for realization of your wealth, as well as the returns which you can get on the stock market. I wish you all the best.